Good morning, everybody.
Morning.
Great to see you all here. I really appreciate you coming. We've got a panel of experts here that are really, I think, going to shed some light on some of the issues we're all having. I get calls absolutely every day about this, and I've got a house and it's pending and there's $100,000 worth of damage. And can the policy be assigned to the buyer? And how do we get the loan closed? And all of this kind of thing. So we've got some really special guests with us today. We've got Jamin Eastman from Chapman Insurance.
MCL.
We've got David Trawick, and he is from our own Vertical Plus Mortgage. And then we've got Emily and Chuck down here from Joe Taylor Restoration. So we're going to be talking about all of these different things. As a broker, I've got thoughts going through my head all the time of what about these folks that have, their house got flooded up to 4 feet. They took the drywall out. Did they do it right? Did they not do it right? What kind of liability is going to fall on you and me and the seller and the buyer? And so all of those kind of things on how to do these projects the way they should be done. So with that, what we're going to do is we're going to start with David Trawick. He is our mortgage professional with our company. And, but I think it's going to turn into more of everybody kind of getting up here and just talking about things because they're all going to relate to each other a little bit. So these roundtables I do every other month. This will be my last one for the year. So we'll start in January with another one. And if any of y'all have, what's
Can
that?
you stand on the toaster for me, please?
I'm muting people.
Oh, okay. If any of y'all have some ideas, I thought of, I get a lot of calls from people saying, hey, we have an escrow dispute and my buyer's not moving and my seller's not moving. Where does it go from here? So that was one I was thinking of doing is what happens with the title companies and attorneys and where do they go from there? But any suggestions you guys have for a good roundtable, and these roundtables, we really want it not for someone to be up here talking to you, but for us to have conversations, and have it interactive. All right. So with that, I will get Dave Trawick up here, and then if you guys feel that you want to come up and it starts getting where you're getting involved, then we'll go from there. And then any questions you have for Dave, fire away.
Great. Good morning, everyone. My name is Dave Trawick. I'm with Vertical Plus Mortgage. For those of you that don't know, my office that I work out of is in the North Naples office, but I am making the rounds. Yesterday, I spent a little time speaking to some agents down in Marco Island. And for those of you that don't know, they have a pool next to the office. So I just found that out. So if you can't find me, maybe I'm sitting by the pool. But anyways, so today I wanted to talk to you guys a little bit about, your contracts and how lending is involved as far as, posting and what's going on. We've got a lot of homes now that are, that were damaged. And, can you close a loan? That's the big question, right? And the answer, the short and sweet answer is, if there is an open claim, insurance claim, the lender will not close a loan. And I've checked with, as a broker, I write for many lenders. So, and I've contacted probably about a half dozen different lenders. They've all told me the same thing. No, if there's an open insurance claim, we cannot, because a lender's going to issue a conditional approval, okay, to the borrower. And one of the conditions on there is that you can get insurance for that home, okay? And if insurance companies, and Jamie will back me up, so they're not going to write a policy on someone that has an open insurance claim, right?
Never.
Depends on the type of policy.
Right, yeah. So, and that's, and I'm drifting into insurance realm here, so I'll let him handle that. But yeah, it's as far as the lender's concerned, if you can't get an insurance policy, then you cannot close that one, okay? And even if they work out some sort of agreement where, the sellers, I'm going to give them the money, or I'm going to do this. And I know Kyle just put a video out. If you guys haven't seen that, talking about what if they say they're going to do this and all this stuff. And so I'll let him talk about that. Now, as far as what can be done from a lending side, if you have a buyer that wants to buy a home, maybe they got, some damage, 3, 4, 5 feet of water, whatever, and then they ripped up the drywall, they put it back together. Hopefully they did it correctly. Can you buy a house? Can you buy a house as is? There are different loans out there. There's what we call renovation loans. There's a conventional one, and there's also an FHA one, okay? Just keep in mind that the property is going to have to appraise based on the scope of the work, right? So it still needs to appraise to get the loan. You can't just go in there and say, I'm gonna put in gold plated toilets and whatever, and that's not gonna work. Yes, ma'am.
Can you speak a little louder? We can't hear you.
Oh, no, okay, I'm sorry. I thought I was talking loud enough. My wife tells me I'm too loud, but, no, you can get renovation loans, okay? So if you're looking to buy a property that, maybe, the first 4 feet of drywall was taken out and now you want to go in there and put it all back together, put the flooring in and things like that. Yes, there's renovation loans. The way those loans work is we will send out an appraiser and you have to have a contractor do the work. You cannot do the work yourself, okay? So with the contractor's going to submit the scope of work and the appraiser's going to appraise it just like he would like a new construction, okay? And then of course, when the work is all done, he's going to come back out and verify that it's all done, as planned, okay? There's different, like I said, there's an FHA one, there's a conventional one you can get, there's also a VA one you can get as well, okay? So there are options for you, okay? Now, what's going on in the market is one of the other things I wanted to talk to you guys about. I just put a video out the other day. This week, we had the inflation numbers come out, the CPI report. So interest rates actually went down. CPI numbers came in a little bit lower than what was expected, which was good, and interest rates took a drop. Last week, we were probably hovering in that 7.5 range for a conventional 30-year fixed rate mortgage. Right now, I'm probably in the high 6s to 7 range. Of course, it all depends on the borrower, right? Debt to income, loan to value, credit scores. But so we're seeing, anywhere from a half point to 1/4 point drop. So if you've got some people that are maybe on the fence and they're kind of hemming and hawing, thinking, I'm gonna wait and wait. Now's probably a good time to get them locked in, okay? Me personally, I expect rates to go up again, okay? And what we're told is maybe not till, after second quarter, we might see the rates start to settle back down, okay? But if it makes sense for your borrowers or for your buyers, buy the house, if it checks all the boxes, it's what they want, it's what they need, all that kind of stuff, then do the deal, let's get them off the fence. We do have different programs to help out. We have buy down programs. For those of you that aren't familiar with buy down programs, there's a 3-2-1. I have a 3-2-1 online on Monday, but there's a 2-1 and also a 1-0. And the way those work is usually they come in the form of a seller concession. The seller is going to pay the cost of that buy down. The money they pay goes into an escrow account. Your buyer is going to get the benefit in, let's just say it's a 3-2-1, for example. So the first year, their first 12 payments, they'll get 3% lower than what the standard rate is today, the note rate, so we call it. So let's just round up to today's rate is 7%, and they get a 3-2-1 buy down. Well, now they're going to get 4% for the first year. In the second year, they're going to get 5%, and then 6% in the third year, and then you go back up to the note rate. Now, with that program, we do expect rates to come back down within the next 2 years or so. Okay. Now, we don't have a crystal ball, so I'm not going to tell you, oh, they're definitely coming down. But that's the expectations that, the Fed's going to get inflation and all that under control here in the next couple of years, hopefully. And we'll start seeing rates settle back down. Okay. Now, they're probably not going to end up in the 2.5%, 3% range like we saw these last couple of years. That was not normal. For those of you that have been around long enough, that's not normal. But I think we'd probably be somewhere in that 4.5 to 5.5 range. It's probably expected. Okay. What if your buyer is in a 3-2-1 buy down, rates go down, say 18 months from now, can they refinance? And what happens to the money that was paid for this buy down? Yes, you can refinance. The money that's sitting in that escrow account just gets applied to the principal. So they don't lose that money at all. Okay. So it's a great benefit. Now, if you're a selling agent or listing agent, the benefit is if you've got a seller who's, you're not getting a lot of action, they're thinking about dropping the price, and they call you up and say, hey, we're at 800K right now, let's drop it to 750. It's actually cheaper to do the buy down. Okay, cost of that, I think it's gonna be 30 to 40,000 range. So you can still keep the list price. offer that buy down. So it's kind of a benefit for the seller as well, because they'll be able to get a little bit more in their gross returns. Okay. Yes, ma'am.
So the seller discounts the house to the buyer by the amount of money that the buy down is going to be.
In the form of a seller concession. So the selling price will still be 800K is the example I'm
Right.
using, right? And then you'll just have a seller concession at closing.
So the the seller is getting the 50,000 or whatever your example was less.
Whatever the cost of the buy down is. I have a in my computer.
And then who gets the benefit of the escrowed money, the seller or the buyer?
The buyer, the
Buyer
escrow
does.
money, so that money that they pay goes into an account, okay? So let's say the buyer has, the first year, they're gonna get 3% lower.
Right.
Their payment is based off of 4%, right? So what happens is, we qualify them at 7% though, because that was today's rate. So the difference between, the payment, difference between 7% and 4%, that's what we pull out of that escrow account every month and add it to that 4%
Oh.
payment. So every month, they're just pulling a little bit, until by the end of the third year, then we're at a zero balance.
Okay.
Does that make sense?
Oh, I see. It's making up the difference.
It's making up the difference. Exactly. Yeah,
You're hoping it's.
we most certainly are. Right, yeah. So,
The DTI is based on a higher rate then, right?
yeah, we do qualify at no rate. So if today's rate is 7%, guys, we have to qualify that borrower at that 7%. Okay? And so if they qualify, then, great, and then they can experience the benefit of this program. And so the first year, like I said, they'll have, 4% and 5% and 6%.
So that's not gonna help these first-time buyers that have been priced out of the market.
No, not necessarily. That's what's tough. But with first-time home buyers, I mean, there's other programs. I've got down payment assistance programs that, for first-time home buyers that are having a little trouble coming up with the money. We've got DPA programs. The one I'm thinking of in particular, I'll give you just a quick rundown here. I won't take up too much time. But, that one, you'll get your buyer will get 3.5% to put towards down payment. Okay, and that's 3.5% based off of first price of loan. Okay, so they'll get 3.5% as long as they make their payments on time for 36 months. Okay, and they don't miss a payment or anything like that. That 3.5% gets waived. Okay, so it's forgiven. It's not something that they have to pay on extra on top of the regular monthly payment. Okay, now what if you miss a payment? Right, life happens. You have a hiccup, and whatever. The lender actually doesn't just say, okay, too bad, so sad, you're on the hook, you gotta pay us back this 3.5%. What happens is you start back over at square one to start over your 36 months, consecutive months of payments. Okay, so they give you another opportunity to start over again and make 36 consecutive payments so you can get that way. Okay, that's called a down payment assistance program. Like I said, I've got a lot of different programs out there for you guys. As a broker, the only things that we don't do are commercial real estate. We don't do anything, just land only. Okay, there's gotta be structure on there. And we don't do HELOCs, home equity line of credit. Okay, but we do refinance, cash out refinances, things like that. Okay.
The non-conforming loans.
I've got a lot of non-conforming, non-QM qualified mortgage type loans. I've got loans for investors. I've got loans for people who just want to buy a second home, primary residences, residential. So 4 units or less is considered residential, right? So, if you have a buyer and he's, say, self-employed, right? And we can do bank statement loans. We can do DSCR loans. That stands for debt service coverage ratio. So somebody wants to buy, rental units and stuff like that. If the rent is going to cover the mortgage and then some, there's a ratio that we use. It's about 1.25 to 1. Then the loan works. We qualify you based off of your credit score and the simple fact that the money coming in is going to cover, at least 1.25 to 1 ratio of the loan. Yes, ma'am.
The down payment assistance program, that's good for FHA.
FHA, correct. Yeah.
There is a Fannie Mae conventional product out there too.
There is, that's correct. Yeah.
For 3.5% down.
Yeah.
That is out there.
Yeah, and for those of you that don't know, first-time home buyers, you can actually go conventional and go 3% down, but you have to be a first-time home buyer, okay? So to qualify as a first-time home buyer, you have to have not owned a home in the last 3 years. So if you've owned homes for the last 20 years, but the last 3 you haven't, you would be a first-time homebuyer all over again, okay? For those of you that didn't know. All right?
But correct me if I'm wrong, but FHA, you can have a conventional loan, you move, you wanna do an FHA loan. You can get an FHA loan as a first time buyer,
Absolutely, yeah, yeah, first-time homebuyers can get FHA.
even though they have a conventional loan. So I can prove.
Oh,
that
you're saying if they have a conventional loan on a property and they want to buy another property?
That's correct.
No, you would not be a first-time homebuyer then. Because you already own a property.
But does an FHA let you have one FHA loan?
You can get an FHA loan, yes, but you just wouldn't qualify as first-time homebuyer. Does that make sense? Okay. Okay, guys, well, thank you very much for your time. If you have questions, I'm gonna be sitting right there. And, again, I'm in the North Naples office, guys. I'll be coming by, dropping off cards at all the different offices though. So please feel free to reach out to me, text, phone call, email, however you'd like to communicate. All right, thanks, guys. Take care.
All right, Jamin, the floor is yours, sir.
Right, I'm gonna bring my old technology with me.
The
Oh,
OG.
look, we've got it all right there. Thank you guys very much for having me. I know, I think it was like a week after Ian, we were on some webinar together.
Oh, yeah, yeah.
As I was listening to you speak, reminded me. So I know I have met a lot of you in person, have gotten a chance to be at various events, and thank you all for the clients that you send our way, trusting us with that. My name's Jamie Eastman. I'm a part owner and principal of Chapman Insurance Group. We're one of the larger independent insurance agencies, particularly in the state, but especially in this part of our state. We represent pretty much every home insurance carrier that's doing business, which these days are fewer than we might hope for. But it gives us a good position to stand up and say, here's what your options are. There's not a lot that we're missing. So if it's possible to do, we should have a solution for you. So the answer to almost every one of these questions, and the questions that we were asked even before we began, was, sure, maybe. We got to take a look. Can I get insurance? Maybe. We got to take a look. Is this going to qualify? What can I do with my claim? Maybe we can help. We got to take a look. There's a lot of uncertainty in the market, and I'm hoping I can answer some specific questions. So I've got my whole list that I'm going to tick through up here. But if you guys have some particular questions, if it's a unique one that, probably doesn't apply broadly in the room, then, I may say, let's talk about that afterwards. I want to respect your time. But no,
Sorry.
that's all right. I got my old technology.
It's
It's still working. So one of the first questions that we started getting from homeowners, especially if they're up north, they haven't seen the home. There was a lot of flooding in my area. I don't know if you guys had seen, but NOAA, the national, I don't know what it actually stands for, but they flew a bunch of satellites over the state in a couple days after Ian, and took some pretty high resolution photos. So even if you couldn't get to the property, you could get some idea of what was going on. So they're saying, I've got flooding in my area. I'm looking at these satellite imagery. I don't see anything. What should I do? File a claim. First of all, in catastrophic events, a lot of people are nervous to file claims because they think, well, then I'm going to have a claim on my history. When insurance companies look both for eligibility and pricing at claims histories, catastrophic events really don't register on their red flag list because there's nothing that you can do. Now, other types of claims, water damage not related to hurricanes, fire damage, liability claims, those are big red flags because those are usually indicative of there's something wrong with the house, right? I had plumbing leak, and so maybe the rest of the plumbing is about to go bad, or there's something wrong with the homeowner. I don't know how many, clients that I've had call up, oh, I left the dishwasher running, and then my laundry overflowed, and then I overflowed my tub. Well, you're just, you're the root cause of all these problems. But catastrophic events, doesn't matter how attentive you are, there's nothing you can do to get out of the way. So don't be afraid to file a claim because catastrophic events, again, really aren't going to impact your eligibility or your premiums going forward. The second reason you should file a claim, if you have any question, is Visible, there's a big difference, can be a big difference between visible damage and actual damage. So the restoration guys, I'm sure, are gonna speak to this as well, but standing on the street, yeah, my roof looks fine, you know, none of my shingles are gone or my tiles or whatever, it's fine. But then you actually get up there and you start doing a little bit of digging, which you're not going to see from the street, but an adjuster may see, a restoration company may see, a contractor may see. They may say, you've got some significant damage, you need a whole new roof, right? And I'm not talking about the fraudulent excessive claims, we'll talk about those in a second. There may be actual serious damage to your house that both you and the insurance company want to make sure gets repaired properly. So if you're uncertain, file a claim. Now there's a lot of, you know, is it flood, is it home? Sometimes there's a real clear-cut difference. If you've got a scum line 4 feet up on the wall, okay, it's pretty safe to assume that anything below that's gonna be flood. Anything that happens above that, probably related to wind damage. Sometimes there's some confusion, and in those cases, you gotta let the flood adjuster and the homeowner's insurance adjuster kind of, you know, go back and forth. I don't wanna do this like they're fighting each other, but, you know, you gotta let them kind of battle out who's gonna pay for what. I'm gonna skip down because I'm not talking to policyholders primarily, but if you have questions about that, happy to go back. So my guess is this next section is going to be your primary interest of, area of interest. I'm buying a home or I'm selling a home with a damage, some damage or an open insurance claim. So how do I do that? Is it possible? Maybe. Let's take a look and let's see. Now, as you had spoken to, there's a lot of different loan types. There's a lot of different insurance policy types as well. So we get a little bit of a pass on the insurance end because we can say, listen, if your home has a significant amount of damage, it's probably not going to qualify for a conventional loan. And so it gets a little bit easier because we can write types of policies that they're used to dealing with claims. They're used to having homes with existing damage. Builder's risk policies are primarily what's there. They're going to have limited coverage, which again, usually won't satisfy underwriting requirements for conventional loans. But if you get a renovation loan, if you have a cash buyer that wants insurance anyways, hopefully they do after what they just saw, we can get this coverage in place. We're going to have some questions, right? We want to know what's going on. We want to know what contractors are going to be involved in, you know, making the repairs. But we can get that coverage in place, and that will keep you insured for the duration of whatever the renovation is. And then we can flip over to a standard homeowner's policy. And at that point, if you're refinancing to a conventional loan, then there shouldn't be any issue. What about minor damage? So there's some, you know, there's a lot of homes out there that maybe we've got some soffit blown out. It may still be able to squeeze through a conventional loan. There's some minor damage. Again, let's see, maybe, right? But it's very possible that when we go out to insure a home, you guys are used to all the inspections that we ask for, right? We're gonna ask for a wind mitigation inspection. We're gonna ask for a 4-point inspection, probably. And if there are some small things like soffit or I've got some panels on my screen enclosure that's blown out or things like that, it usually is not an issue to get. It's probably gonna be with citizens, but it's usually not an issue to get those kinds of things passed through their underwriters, and they'll give us an okay, and we can get a policy in place. Now for larger, you say we've got some, the roof is still there. It's not actively leaking, but it's watertight and it needs to be replaced. We know that. This is where, again, if we have contracts with a roofing company, maybe some good faith money put down so they know we didn't just get a number from a guy walking by. But we have a signed contract with a roofing company with a deposit made. That's where even if the roof is in poor condition, that a 4-point is going to say 0 life remaining, and not typically going to qualify you for a standard homeowner's policy. We can submit that over to our underwriters or citizens underwriters and say, hey, listen, we're repairing this as quickly as possible. Here's the contract. They will most of the time, give us the okay to proceed. Now, Citizens has always had this provision in their underwriting guidelines. If there's damage, roof or otherwise, that we've got a contract to repair. If it's gonna be done within a reasonable amount of time, sure, we'll kind of give you a pass. Now, reasonable amount of time is what was reasonable a year ago, right? We could say, hey, we need this done in 30 days, and we could find a roofer that would say, yeah, I can get it done in 30 days. Now, we don't know. And that's why I say, let's take a look. If they say they can get it done in 30 days or 60 or maybe even 90 days, we should be able to. But we've got to take a look on a case by case basis. Now, if you've got what we're running into more these days, we've got an open claim. Okay, so how do I handle that as a buyer or as a seller? So let's start with the buyer. I'm a buyer. I'm interested in a house with an open insurance claim on it. Again, probably not be qualified for a conventional loan, so that makes my job pretty easy. Yes, we can handle an open claim regardless of where the financing is coming from, because they're going to be okay generally with a builder's risk policy. We got a few more questions, but we'll be able to get you insurance in place to satisfy the requirements of a renovation loan, or cash buyers have no requirements. But we'll be able to get insurance in place in those cases. Now, we're also getting questions from sellers saying, well, I've got a claim here. My buyer doesn't want to close. Maybe they've got a great conventional loan. And I am as the seller and willing to just go ahead and pay out of pocket. Right? I'm going to pay to get all this done, but I want to keep I want to recover my money eventually from my insurance company. I'm willing to front the money to get the work done more quickly so we can close on the home. And that's where, with an open claim, if we have proof that damage has been repaired, the claim can remain open. It can remain with the seller of the property even after the closing of the transaction. And in most cases, we're going to have, again, we're going to be limited in terms of numbers of carriers. But yeah, we'll be able to get a standard homeowners policy in place that would qualify for a conventional loan. My guess is with an open claim, if all damage has been repaired, that answer that you gave earlier may be a little bit different.
Right.
That's correct. So yes, we will be able to get a standard homeowners policy in place that will satisfy the conditions of a conventional loan.
Excuse me.
Yes, sir.
You can get the builder's risk with that claim out there.
You can get a builder's risk policy with an open claim
Okay.
and with existing damage.
Okay.
You can get a conventional homeowners policy with damage that either has already been repaired or damage that is soon to be repaired with the signed contract. Again, even with the claim open, it's possible to get that done. A little harder, but it is possible. Now the third avenue that I've seen some sellers or some buyers trying to navigate is, well, can I just assign my claim to the buyer of my property? One of the challenges that sellers will run into in trying to recover cash after the sale of a property is it can get a little bit tricky recovering depreciation. So let's use worst case scenario. My house is total. I've got a plot of land on Fort Myers Beach. I have no intention of rebuilding the house. I'm done with Florida and hurricanes. I just want to cash out. So I'm going to sell my property, but I want to file an insurance claim. What's probably going to happen is you're going to be able to recover a depreciated actual cash value of the home. You're probably not going to recover the full replacement cost value of your home because you didn't replace it. They're going to pay that out. So can I continue on with the claim even after the sale of the property? Yes. In those cases, I would say get a real estate attorney involved. That's above my pay grade. They're going to be able to advise you more specifically going forward. So it can make the recovery of that depreciated amount a little more difficult. Now, if you paid out of pocket, that makes it a little easier. But if you're saying we're going to continue on with the claim afterwards, it can get challenging. can I assign my claim? I've got a seller, maybe he's a cash buyer, doesn't have any concerns. I don't want to pay out of pocket. The buyer is okay with that. Can I just go ahead and give my claim to the buyer of my property? Maybe. There is an assignment of benefits provision. I'm going to talk about the evils of assignment of benefits here in a second, but there is an assignment of benefits provision which assigns the benefits of a policy to some third party. Because it has been an area of an enormous amount of fraud. I say if there's one thing that's led to all the challenges that we've had, it's assignment of benefits. It's not hurricanes. So what a lot of companies have done is limit the ability to assign the benefits of the policy, which is why I say maybe. In most cases, that's still an option. And even in some cases where the policy limits assignment of benefits, what they're usually targeting is assignment of benefits to a third-party contractor. They may make it an exception if you're just assigning it to a new owner of the property. So, yeah, if you're a seller with an open claim, you don't want to pay out of pocket, you're just done, you've got a buyer who's okay with that, check with the agent that wrote the original policy. It's probably going to be okay to assign the benefits of that policy and that claim over to the new buyer, and then they can just run with it as. Yes.
I'm supposed to be closing this afternoon, hope to God. I have a condo that's, the flood insurance is paid by the association.
Mhm.
So the claim, they had a few inches of water, they're on a canal. They filed the claim, the HOA filed the claim, and we're selling before this is long before it'll be settled, but the insurance company with the HOA.
Mhm.
So my seller wanted to protect his interest. He made the repairs. He had out of pocket the repairs done. So he wanted to assign the portion of the benefits that come from the insurance company to the HOA to himself. So he went to an attorney, not the best one in my opinion, but not a lawyer either, but. But anyway, so it got a little hairy, like really hairy until yesterday even. Because the buyer was a little nervous about signing this document that the seller's attorney wrote up, which was not well put. And so she went ahead and got another one written up as just one simple, straightforward paragraph. But my question is, whose responsibility is it? We kind of logically thought, why would the HOA not just give it to the rightful owner at the time of the damage, even though he's no longer in contract with the HOA? I didn't understand that. Can you explain that to me? Like, does that exist, or is my seller just being overly cautious?
So I think you've overstepped where my area of expertise
Oh,
is more into real estate law.
Okay,
It probably has to do with the way the contract is written, right? You can have a real estate contract say whatever you want it to say, right? Liability and benefits can go in either direction. And so my guess is that real estate attorney was probably being maybe a little overcautious and maybe wasn't explaining it clearly, but yeah, that's a real
okay.
nuanced area that once it gets into actually adjusting claims and how those are going to settle, that's not my license. While we can advise on what coverage should do, specific claims, it's tough to say because there's so many variables.
So you as an insurance company wouldn't just automatically send it to the seller, even though he's gone?
Well, I'm not sending anyone checks. The agent is a third party between the insurance company and and the client. So
Right.
yeah, the checks, they can go anywhere, right? A lot of times they're going to go to a bank that holds a mortgage first to get them to sign off. So it could go to a third party, certainly want, but yeah, and that I hesitate to offer an answer beyond what your real estate attorney offered. So sorry, I can't.
Okay. I came here for nothing.
So any other questions in that area? And if they come up later or after the event, happy to.
When you said that, we can still get an insurance policy on the house that's being sold if, some of it has already been repaired or will be repaired shortly after.
Mhm.
What's the situation with the roofs? Because right now, many of the owners can't even get roofers to get it done. So
Right.
is there some kind of a timeline on that? Or-
So usually, historically, it's been 30, 45 days. That's the acceptable, the contract says this will be done within 30 to 45 days. Now, Citizens is working kind of behind the scenes on updating, but already we've seen a little bit of flexibility on that. 30, 45 days, maybe become 60 days. Maybe we just send a notice saying, hey, we would really like this at 30 or 45 days. I mean, the short answer is if it's not going to get, I'll revert back to my earlier comment. If it's not going to get done soon, it's probably not going to qualify for a conventional loan anyways. And so then I would say, let's just not even bother trying to squeeze it into Citizens for right now. Let's buy you a 3-month or a 12-month builder's risk policy that is fine for however long it takes, and then we'll convert over to a conventional, standard homeowners policy.
Can you elaborate on that builder's policy? Because I don't know anything.
Yeah, so a builder's risk policy is a type of insurance similar with the primary coverage to a standard homeowners policy. So it's going to cover things like fire damage. It's not going to cover water damage because the assumption is if the home's not livable, the water's shut off at the street. So water damage shouldn't be a huge concern. It's going to cover hurricane or storm damage, lightning, vandalism, those kinds of things. May or may not cover liability. So if you've got a buyer, make sure they've got proper liability coverage. But it is either for ground up construction, there's nothing there to insure, but there will be. So standard policy is going to say we need to wait till the house is there. But this protects you going through. We had a lot of these claims on Hickory Boulevard up into Fort Myers Beach. A lot of these old, homes being torn down and people putting the big homes up. They had significant amounts of damage, a lot of it from flood, but some of it from wind as well. And their coverage was all under builder's risk policies. So, but it can also be for major renovations. There is an existing home there, but it's going to be under renovation for 3, 6, 12 months. And so, again, it's not the primary provision that loan underwriters, and you can correct me if I'm wrong, loan underwriters are looking for a conventional loan is we need the dwelling coverage at replacement cost up to whatever the insurable amount is for the loan amount. The primary provision that would make this unacceptable for a conventional loan is 99 times out of 100, the loss settlement for the dwelling is at actual cash value because it's under renovation. They'll say we're covering the new stuff, whatever's being added at replacement cost, but the existing structure, we're covering an actual cash value. So again, that's not going to work for a conventional loan, but for a renovation loan or certainly for a cash buyer who doesn't care, it's a way to satisfy those guidelines and keep you insured for the primary things. Is that helpful?
Yes.
Okay.
Jimmy, could you just explain? I know we've got some folks that come from another state or just a brief about Citizens and what is it?
Sure. So we used to say Citizens is like the worst thing in the world. Now it's like, oh man, I'm so glad Citizens are around. So I'm actually going to jump down to this section right here. And I'm going to address that question along with it. So what's insurance going to look like going in the future? To really understand that, we got to take a step backwards and figure out how did we get here? Because a lot of people say that we all know, right? Either because we're watching the news or we're getting our renewal offers from our insurance policies, and we've seen they've doubled or tripled over the last year or two. We all know that the Florida property insurance market is an absolute disaster right now. And a lot of people think, well, it's because you've got hurricanes. You got Ian, we had Nicole, just a week ago. That's really not the problem. The actuaries, the people sitting in the room doing the math, figuring out how to price things, they know how to price hurricanes into the policy, right? You can look at historical track records, and maybe we're going to have more this year than last year, but we know how to price that. The primary thing that is driving this is fraud and excessive claim, largely driven by AOBs, assignment of benefits. So this was a provision that was put into place for good reasons. A number of years ago, the state wanted to protect homeowners from being offered lowball offers by their insurance companies. So that's a good thing for the state to want to address. So they said, you can assign the benefits of your policy to a contractor and let them hash it out. And then they put all kinds of punitive penalties on insurance companies if, hey, we've gone through litigation and we've realized, insurance company, you were trying to lowball it. So now they're gonna be hit with all kinds of multipliers on attorney's fees, and they're really trying to incentivize insurance companies to do the right thing from the beginning. So what's happened with these assignment of benefits claims is, in any industry, there's good laws in place to protect people. Somebody finds a way to make a buck off of it. So roofing companies take the brunt of this, but it's not just roofing companies. People will come in. Now, I'm going to use roofing companies as an example because they're the ones in the news, but there are a lot of good roofing companies in town. I'm going to go in. I'm a roofing company, probably not a roofer. I'm probably a salesman for a roofing company. Knock, knock, knock on your door. Hey, your neighbor had some storm damage and they got their roof replaced. If you sign this piece of paper, I'm going to do a free inspection. And if I find roof damage, I'm going to go to your insurance company and I'm going to get them to pay for a new roof. And if I can't, you're off the hook. But if I can get them to pay, then you have to give us the job, right? So what that is, you're actually assigning the benefits of your policy to the roofing company to go to the insurance company, and they now own that claim. Now, after Hurricane Ian, I lived down in Naples, Irma, sorry, I lived down in Naples. My home and my neighbor's home, exact same home, built in 1992, more or less the same footprint, the same size, 2,000 square feet. We both lost our roofs. I mean, no question about it, gone. I filed an insurance claim, got a roofer that I knew. He came in, hey, the price of shingles is a little higher because it's after a storm. It's going to be about $20,000 to replace your roof. My neighbor, knock, knock, knock. Yeah, here, I need a roofer. I'm glad you knocked on my door. Sign this. The insurance company, what they did is they filed an excessively large claim that the insurance carrier now has the option to try to fight. But they're probably going to get sued. They're probably, instead of really going through a claims process, they're going to get sued by the roofing contractor, knowing, man, if we're off by even $1, this is going to get really expensive for us. And my neighbor's roof paid out at $60,000, same exact roof. So how do you build that into the cost? There's no way to accurately predict.
And just to jump in on that, the big issue is the insurance carriers, they go $60,000 or they go $100,000 with litigation.
Yeah.
That's the issue.
And you're exactly right. Because of those multipliers on attorney's fees and punitive damages, you can say, well, sure, I'd fight it. You know, that's 3 times the amount. I would fight it if I was the insurance company. Not if you realize if you're off by even $1, Mr. Insurance Company. If you say it's $20,000 and it turns out it's $20,001, you lowballed the client. And so all of these punitive damages apply. So they just started paying. They just started paying. So all these free roofs, you guys are now paying for. So thank you very much, policyholders. So what this has done over the past couple of years is created an environment where private companies have just said, it's not sustainable. It's why when you have clients coming out of state and they say, oh yeah, I've had Travelers or Liberty Mutual or Nationwide for years, or State Farm, Allstate. I've had them for years, but they're not in Florida. It's because it's not a sustainable environment for private companies to do business. So you've had a lot of small Florida-based companies. You guys are probably familiar with some of the names that have popped up, and you know, they've got a smaller footprint. They've got a lot more limitations on their policies than you might find in the rest of the country. But even for them, first of all, they're hugely reliant on reinsurance because they don't have their own big bank account sitting. So they got to rely on Lloyd's of London and some of these other guys. And so 60 cents of every dollar that I pay and that you pay an insurance premium, they're paying to someone else. So It's very expensive for those insurance companies to offer insurance. And increasingly so, and so that's why you've seen just this year, I think our seventh insurance company has folded. We're either completely insolvent or we're pulling out of the state completely. Over the last 3 years, I think there's been a dozen insurance companies that have gone belly up. And so back to Citizens. Citizens is started in the early 90s after Hurricane Andrew. It wasn't called Citizens at the time, but it was a response to all of the nationwide carriers pulling out. And they said, we've got to find something to keep our people insured. So this was set up by the state. It's a nonprofit, not-for-profit company. And it's become the insurer of last resort, although these days, the insurer of only resort in many cases. Now, Citizens is not immune from a lot of this excessive litigation and fraudulent claims. So they have to deal with that. But Citizens rates are artificially capped. They are not actuarially sound. Right? So a private company, we got to figure out how to make money to stay in business. Citizens doesn't have to do that. It's backed by the state. And the state legislature had capped Citizens rate increase to, I don't remember the exact number, 11 or 12%. So in the last couple of years, the average rate increase, if I have a policy in place and I get my renewal offer, average across the entire state, all companies, so this isn't, one company is better or one location. The average across all carriers, the entire state, has been 35 to 40% rate increase. That's how much I need in order to stay in business. Citizens is capped artificially at, call it 12%. So Citizens used to be kind of in line premium wise with private companies. And it's not too hard to say, first of all, Citizens has a law. You can't, if you've got a reasonable offer somewhere else, we're not going to insure you anyways. But Citizens has some holes in its policy. So if I've got a really good policy with a private company and it's the same price as Citizens, there's no reason to even look at Citizens. But now that's not the case. It had changed a little bit this year, but I've always used the 40 carriers plus or minus as kind of the number of companies that we have written with. That's come down a little bit even towards the beginning of this year prior to this mess. A week before Ian, they had all shut down. No new business being written anywhere in the state. After Hurricane Ian, 5 or 6 have reopened. And then they all shut down again for Nicole. And after Hurricane Nicole, which non-event for our area, but did impact the east coast of the US, of the state, 4 or 5 have reopened. And when will they reopen? No idea. Some of them, came out a couple of days after. Either they didn't have a big footprint in the area that was affected, and so they don't have to divert a lot of their resources towards claims handling. And they're just ready to reopen, or they're being super aggressive. I don't know why you would these days. But most companies are saying, we are just not sure we want to get involved in new business right now. There's just too much unknown liability on our balance sheet right now. We got to take care of that first. So it could be years before we see kind of a normalization. And so Citizens is becoming our go-to. If you've got brand new construction, not brand new, but 2010 or newer, sure, there are actually some really good options for you out there for your home buyers. Really good companies, really competitive premiums, relative. There's some good options. But if you've got a home that's 20 years old or older, more than likely you're going to end up with Citizens. Now, again, Citizens has some limitations. The 2 big ones are liability, which they're going to cap at $100,000, lower than I typically recommend, but you can supplement that pretty easily. For single family homes, the biggest one that stands out to buyers is no screen enclosure coverage. That is just not available. And yeah, there's a third party product, but it's so ridiculously expensive that I've never actually sold a policy for it. So, but I was working with a client yesterday. Here's a private carrier. They're going to offer you, they're going to fill in some of the gaps. It's not Citizens. The premium is $9,000. Here's a policy with Citizens. Be aware of all these holes. Premium is $3,000. You can be the best sale, if any of you are good enough salesmen to sell a $6,000 premium difference, I'll pay you twice what you're making right now. If you wanna come work with me. It's just not gonna happen. So, Citizens is continuing to grow, and this cycle is not new. We saw it after Charlie. Citizens, bigger and bigger, accumulating more and more policies. It'll take a couple of years for all the noise to die down. Maybe in that time, the state starts to address some of the real root issues. Who knows? But it'll take a couple of years before you start to get private companies really saying, okay, now's our time. We're gonna either open up new business or we're gonna buy some of the business from Citizens. But until then, one of the things that I've come to realize with Citizens, our restoration guys know a lot of policies for older homes, especially, you're gonna have a water damage limit of $10,000. If it's older than 30 years, that's it. You got a broken pipe, you got $10,000 to fix it. Very, very common. Citizens doesn't have that provision. You've got a limited number of contractors that you can work with, but if you work within their approved network, no limit on water damage. So yeah, you're giving up screen enclosure, but if I lose my screen enclosure, I'm out 20 grand. If my house floods, I'm looking at Citizens again now saying, premium aside, there's actually some advantages here that are making this attractive for other reasons more than just cost. So, we used to tell Citizens, we send it to a client, say, hey, caveat, be aware. Now we're starting to say, and not just the salesman in me, but now we're starting to say, listen, this is a reasonable option. It's not the end of the world. Citizens is there to provide insurance specifically for times like right now. There's no other good option for you. And it's not a horrible policy. So, that's where Citizens is. Don't be afraid when you hear Citizens. We'll explain to the client all the things they need to be aware of.
Yeah, some folks have gone.
Yeah, but get used to them. And you as realtors, when you go out, get a 4-point inspection. I don't care what the age of the home is. Get a 4-point inspection. Get a wind mitigation inspection, because they're Citizens picky on those kinds of things. But it's what we've got. It's the hand we've been dealt. There's a phrase that I just learned the other day in the lending industry. Is date the rate and marry the home. Right? Date the policy and marry the home. Get Citizens in place. If we can improve on it down the road, great. But right now, this is what you get, and maybe we'll do better later.
Let's see, like for shingle roof, what is like the magic number for an age of the roof? For the premium to jump?
So there's,
You hear all these horror stories out there.
yeah, so with Citizens, the age of their age eligibility guideline is 25 years for a shingle roof. Right, so again, that's where Citizens is actually pretty good for somebody with a 2003 was the last major update to the building code. So when you look at a wind mitigation inspection, that's where you get all your discounts. And 2003, if the permit is, actually, I think it's March of 2002. If the permit is March 2002 or later, you're gonna get that age of roof discount. Now, there are 6 or 7 other variables in there. How big are the nails and how close are they together? Do you have hurricane straps or those kinds of things? That can also impact the premium, but in terms of just the age, 2002, you get the credit or later. Now, what you're going to run into is eligibility issues for age of life. Most private carriers are saying if it's a shingle roof and it's over 15 years old, 10 years old, we just don't want to insure it out of hand. So in that case, you're going to see a big price jump potentially because you're going to not qualify for the most competitive premium carriers, and you're going to have to go. Somewhere else. And now the state did say, I've got this question a lot from clients and from realtors. The state passed a package of legislation in July of this year that said carriers can't deny simply based on the age of the roof anymore. Right? People are getting dropped all over the place. So if you're being declined because your roof is 15 years old or older, You can't do that anymore. You got to give the client the ability to go out and get an inspection and say, hey, there's 5 years left on this roof. But they said only for the age of the roof. So what we're seeing, again, 99 times out of 100, okay, 15 years old, but I don't like the condition of it. It has nothing to do with age. And so the state was trying to force the hand of private companies to get them to assume risks that they didn't want to assume. And lo and behold, they found a way not to assume those risks they didn't want to assume.
So Citizens is gonna write most of the policy.
Citizens is gonna write most of the policies for any home that's, 2005 or.
A 17-year-old roof gets banged up pretty bad in a hurricane, like, what do they appreciate that roof when they write you a check?
Well, and that's another advantage to Citizens, besides the water damage thing, a lot of private companies, as they were trying to figure out these older roofs, okay, we'll insure a roof that's over 15 years old, but we're gonna depreciate it, right? So if your $20,000 roof is, 18 years, 17 years old and gets banged up, we'll give you 50% of what it costs to replace. Citizens does not have depreciation coverage on their roofs, regardless, as long as it's eligible for their program, and has 3 years of remaining life left on it. When you write the policy, that's fine. If you lose it tomorrow, we'll pay you 100% of what it costs to replace your roof. So not bad. Again, we've gotten used to speaking ill of Citizens. Gosh, I just feel good with the government program. Kind of makes me cringe a little bit. I know. Cringe a little.
It's amazing what they can do with it. It's subsidized.
It's subsidized, absolutely, and all of that money comes from somewhere. And if you look at the bottom of your private insurance company, you'll start to see all of those fees starting to get added. It's all coming from somewhere. So the state isn't just,
What's gonna happen when you only have Citizens?
what's gonna happen to me?
Yeah.
I promise, Citizens had said, well, maybe we'll write direct to consumer and we'll just avoid.
Yeah.
I mean, Citizens pays us a third of what an average, so they're not paying a lot for our services anyways. Working with Citizens is an absolute nightmare, trying to get a policy down. So if they want to try to go that route, God bless. It is not gonna happen.
They're terrible to work with on our end too.
Yeah. So again, I know we kind of fire hose of information and there's probably a lot of specific questions. And if you guys have those, chase me down after the meeting or my contact information somewhere floating around. I'd be happy to.
So if you have a situation where, you have this flood damage in the house and everything like that, whatever, 4 feet.
Mhm.
I mean, the best situation for a realtor, where does the realtor start? Does he start with the insurance company, with the restoration company, with, how do you get this organized?
So the steps that you're taking,
Yeah.
well, I'll let you guys give your preferred step. I think they're gonna be pretty similar. Your first responsibility as a homeowner, forget about trying to sell the house. Your first responsibility is prevent further damage from happening. So take pictures, take as many pictures as you can, but get rid of that wet. I mean, at this point, you're a month and a half later, if it hasn't happened in the first 2 days, it hasn't happened. But your first responsibility is prevent further damage from happening, because if you don't, if you say, hey, now I couldn't get to my home because the bridge to our island collapsed, right? That's a extenuating circumstance, but I sat around waiting for an adjuster to show up and he didn't show up for a week and a half and now my house is filled with mold. Sorry. It's gonna be a real tough fight with your insurance company because you didn't do your first job as a homeowner. Yeah. And
That reassignment of benefits. Is there a form that the insurance companies usually provide things or?
it's probably not, I actually don't know. We don't deal with that. The insurance companies do not want the benefits to be assigned. So they're certainly not providing it, but there's state required language to assignment of benefits. That's at least used with contractors. So I'm sure a real estate attorney can provide you with something because it has very specific language that if it's not right, it's ineligible. So make sure you get, I would advise one.
So they hide them. That's the biggest thing that most of these companies that use that, they hide it in so we present everyone with a work order. Hey, we're gonna do this. and you're responsible for this as far as payment, that type of thing, if your insurance doesn't pay, right? That's what our work order is, and it just says that we're authorized to come in and start doing the work. But what a lot of companies do is they'll give you a 3 and 4 and 5 page work order. And within there, the assignment of benefits language is in there, so you're signing off on both. So one thing about assignment of benefits, if they do sign one of those, they have 14 days to rescind that. So that's kind of good to know. But as far as, I mean, it is not just roofing companies. There are dirty rotten scoundrels in every business. We all know that. And those dirty rotten scoundrels are gonna try to slide that in if they can.
Let me give you a good example of someone that's not a roofing company, but this is, when I talk to my neighbor, he's like, what do I care if they paid $60,000? I got my roof, right? You got your roof. And $60,000 spread across every policy holder is not gonna hit. That was kind of his attitude. A good example, assignment of benefits claim I just ran across. We had a client, trees down all over the property. One tree hit the house. And she had a debris removal company come and say, hey, assignment of benefits, we're gonna go to bat for you. You've got trees down all over the place. We're gonna get your insurance company to pay every dollar that they're owned. Now, it also says, and you're on the hook for anything else. In your homeowner's policy language, most of them, almost all of them, with few exceptions, will say, if a tree falls down on your property and it's touching the house, $500 for that tree. If it's just laying down on the property, that's not covered by your homeowner's insurance company. So they gave her a bill for $20,000. This is how much it cost to cut down and tear up all of these things. They were gonna go to bat and they were gonna recover $500. And the other $19,500 was gonna be a lien on her house. So that, can an assignment of benefits, is it just kind of some nebulous, my insurance company overpaid? No, it is, they are going to collect on that money one way or another. And you and your clients do not want to be, that claim.
So what happens then when you use an insurance adjuster?
So assurance adjusters, public adjusters are not a bad thing. Hurricane lawyers are not a bad thing. Now, the ones that are going door to door and showing up the day of the storm and, billboards all over the place, they're out to make money, right? So, and I get that. And they are very necessary sometimes because as much as I like to think every policy that I write is great, we've seen it. Some companies have just absolutely dropped the ball in their claims response time. And sometimes either the threat of an adjuster or hiring an adjuster is absolutely necessary. I would never tell my companies this, but I've told clients at this point, I think you need to get either an adjuster or an attorney. Now, the adjuster is going to take some portion of the claim, which if it was a total loss. Now, don't hire an adjuster for a total loss in a flood claim because you're capped at 250,000. And if they take 25, you're going to be out of luck.
And I also think, again, there's dirty rotten scoundrels in that business too. And we've seen it where they'll come in and you have an island, the dishwasher leaked, and by the time they're done, you're getting new cabinets throughout the entire kitchen because if they don't match what was the island, they're having to paint the kitchen, but they're also having to paint the living room because the paint carried over there. So what happens is because of, again, they're paid a commission on how much that claim ends up being for, right? So there are public adjusters that just see money signs and they will just continue to add. I mean, we've had public adjusters claim things on the second story where the first story was the only story affected, but because the paint had to carry up there. And, so you have to be, and to your point, the signs that you see put in the ground right now that says, call us, we'll fight for you. Those are the dirty rotten scoundrels. I mean, so when vetting that out, we have to be extremely careful.
I had a roofer that, one of my favorite roofers to work with, honest guy, been around for 30 or 40 years, all that, does good work. He had a small issue with some storm damage to his roof. A public adjuster called him and said, hey, you're busy doing roofs, let us take care of this. And he called me, he's not a client of mine, but he called me, he's like, they're trying to get 120 grand out of my insurance company. It's like, I'm a roofer. I know how much it costs to replace my roof. What are they doing? And I'm exactly what you said. Oh, well, got a couple of drops on some, ruined this one area of wood. And now we got to refloor the entire house. And Yeah, it's, in any industry, find good, local, reputable companies that have an interest in staying around longer than storm money is being paid out.
Do you give your customers, advice, on all this stuff, like, do you wrote the policy?
That's,
Like,
Yeah, if they call me up and they say, you know, I've got roof damage, I'm not gonna tell you, go to this guy, but I'm saying, here's 2 or 3 companies that I've worked with before, I have firsthand experience, I know their quality work and the prices that you can expect.
my question is, why doesn't insurance company send a letter to the consumer? Because we're all are in the dark about this. You know, why don't they say, you know, by the way, if you hire these people are gonna not be in your best interest.
So it's.
Why don't you send a letter saying, educate us the way you are?
The reason, and I'll admit my bias, I'm on the insurance company side of things. The reason that we're all in the dark about this is the same reason that, when the state goes to address some of these things, they kind of come, you know, I'm gonna take a half step in the right direction. It's because on the other side of that, you've got the Trial Bar Association, and they got a heck of a lot more money. As much as they like to say, big bad insurance companies got all this money, they got a heck of a lot more money, and they're paying more advertising dollars.
Well, and again, the insurance industry cannot advertise on TV saying, oh, by the way, don't sign an AOB. By the way, you know, talk to us they can't do that, but all these, you know, the trial lawyers and, you know, it's just amazing how many lobbyists they have working the system, how many lobbyists they have making sure that they can get their agenda through, you know, and so it really becomes this a legislative issue. So that's why there's something called Capital Days, which, you know, where the insurance industry flies into Tallahassee. Our company is there. It's in March this coming year, and I'm going to it. And what we do is, last year we were talking to a senator, a state senator, and we said, this affects you. And she said, no, this does not affect me at all. She goes, I rent. And I said, but who do you rent from? And we're talking about insurance. We're talking about rates going up. And I said, who do you rent from? I said, don't you think that their insurance is going to go up, which is going to affect you? And she kind of went, oh.
Oh, my God.
And we wanted to shake her, yeah, absolutely. So she said, yeah, so they don't know.
Oh, I don't want to get down the politics.
Hey, that was awesome. Thank you very much. Yeah.
So we'll carry on with that. Again,
Introductions?
yeah,
Go ahead, Dave.
Yes, this is Emily and Chuck,
Yep.
and they're from Joe Taylor Restoration.
absolutely.
Yeah.
So we've been around for 20 years. Joe's owned the company for 20 years. And the biggest thing that we do is everything that we've been talking about this morning is we're on the insurance side of it. As I said, we do the flying days to the Capitol. We talk with the, you know, the state legislative people and everything, and we're trying to make sure that they understand what we're talking about today. So first of all, do you guys know what class 1, 2, 3 or water is? Okay, class 1 water is, if this were water, that's class 1 water. It's safe for human consumption. It's very important to understand that, that's what class 1 water is. Class 2 water is gray water. Gray water is something that came from your dishwashing machine. So if your dishwasher sprung a leak and water got, you know, out there, now again, there's 2, even on the dishwasher, there's a supply line. And then there's if the dishwasher malfunctions and is dumped on the floor. Then there's class 3 water. I think we all can imagine what that is. That's everything else, right? So the issue is this: when we go out and we look at a situation, we're looking at what needs to happen. So class 1 water, all we have to do is dry it. There's nothing else we have to do besides dry the home and get out of there. We now have equipment. For instance, if this room were fully flooded, 10 years ago, the carpet would immediately get ripped out. Now what we have the ability to do is there's these things that these guys ride on. It's called a rover. It has a joystick. The body weight of the person plus the suction it has, we could actually suck down past the padding. If there were padding, there's probably not padding on this carpet because it's commercial, but we can actually get down past the padding. So when we come out to your insured house, we're actually able to do that without tearing out things. So we do a lot of non-destructive stuff, but that's on class 1 water. Class 2 water, again, there's a lot of cleaning we can do, but class 3 And that's what we're talking about with these hurricanes because of, it was rising water that came into the house and all the oils off the street from cars, everything, that's all involved in that water. So what we do is wherever that scum line was that someone mentioned earlier, we go 2 feet beyond it. That's just proper, it's IICRC. That's the governing body that tells us what we can and cannot do. Now, what happens is this, is we talked about those dirty rotten scoundrel companies out there. They will come in and they will see the scum line. If the scum line is that piece, that little chair rail that goes around the room, they'll see that's the scum line. What they'll actually do is they'll say, hey, we need to take off the whole wall because we don't know what's behind it. There's equipment that we can look and see what's behind it. There's equipment that we can actually tell you or your homeowner, it's just like when you buy a car. And I always, the standing joke is when you buy a car from someone, what you do is you pull the seatbelt all the way out. And you look all the way out. If you pull it all the way out and there's mold on it, that means the car's been involved in water. You let it go, you go, no, thank you. Most people don't know that, but that's what you do, is you just pull it all the way out. And then that's the one thing they won't do anything about. They'll make it look, appearance wise, it'll be good. So same thing with the house. What we're able to do with our cameras is we're able to go in and we're able to tell you if the water is behind the wall. Again, on a fully flooded house, yes, it's going to be. But even in normal circumstances, we're able to kind of tell you, based on a lot of different things as far as the equipment we have. Now, the biggest thing here that we're gonna deal with over the next 6 months is mold. Yesterday, Emily and I took a drive down Fort Myers Beach, and it's just devastating. But the issue is there are a lot of homes that were unaffected, and I use that term very loosely. They'll all be affected within the next 30 days because the issue is there's no power there. So if there's no power, and so this is when it comes to you guys and selling homes and everything, the biggest thing that your homeowners have to know, that your sellers have to know, and the buyers have to know is, has the house been ventilated? Has the air been kept on? Are they doing that due diligence to make sure that that mold cannot happen? Mold is the worst thing that we deal with because of the fact that it's costly to remove, and you have to, anything that the mold is on, you have to cut out and remove. So that's what we're dealing with the storm. Now, one of the questions was asked as far as, okay, when is it knocked down versus when can the house be salvaged? So what we do is a couple of things. We look and go, can we contain it? Meaning, is there a roof still? Are there doors and are there windows? If those 3 things are there, we're able to salvage a home because we can close off the home, we can provide the right humidity into the home, and we can actually service and pull things out that we need to pull out. And that's why you see these big piles of stuff everywhere.
Without air, you can do that.
I'm sorry?
Without air conditioning, you can do that.
We have to have air conditioning. Okay. So we have to have power.
So Fort Myers Beach.
The Fort Myers Beach is,
No, yeah.
They're selling homes. There's homes under contract.
We just sold a $6.1 million home.
I seen one that was flooded,
Yesterday.
6 feet up, that was all ripped out and everything.
Yeah,
That's $6 million.
yeah, that's what
They're
it's
selling.
now, again, if they rip everything out, then at that point, now you're down to the cinder block, and I hope that they're not rebuilding it until they get power to the home and get air to the home, because otherwise you're gonna deal with mold again. I mean, mold is the worst case scenario. So again, if there's power, so when we were intaking all the calls, from the storm from Ian, what we do is we'd ask a couple of questions. Can we get to the home? Of course, we need to be able to get there before we can do any work. Were the windows affected? Was the roof affected? Is there standing water? And does the home have power? Those are the questions that we ask because that's what determines if we're going to actually go out or not. We had lots of people mad at us. They didn't have power and they're going, you need to come here. And we're going, then what? What do we do, once we get there?
Okay, so I have a condo owner on Fort Myers Beach. Her condo wasn't affected by the water. The building was, but it's still structurally sound. So there's no power, and she's in another state far away. My question is, if you have no power, no air conditioning on for all of this time, is there a mold issue?
Yes.
And so how does would it be better, because she's supposed to be coming here to put eyes on it around Thanksgiving?
Mm-hmm.
And I'm like, yeah, you might want to talk to your inspector and find out if you should open the windows a little to keep it ventilated, or, Because who knows when the power's coming back on? What are they supposed to do with that?
It's, you know, when we were driving through, there was lots of standby generators running on homes.
But they're out of town.
They're talking about like a fourth floor unit that didn't get affected.
They're actually, they were pulled the first floor, but they're actually a second floor because underneath was just like storage closets and the parking, carports and things like that.
Power since.
Yeah, since September 28th or whenever.
The unit wasn't wet.
No, their unit was not wet. So, but I know in Florida, you kind of need ventilation even
You need
without.
ventilation. Yep. So one thing I would do is, you know, there's a property manager on site there.
Right.
As opposed to her coming down and get eyes on it. My personal opinion, this isn't professional, as I would call that property manager. We deal with a lot of property managers on a regular basis.
Okay.
I get that property manager in there to do some sort of an initial inspection or have a reputable company come out and do an inspection. I mean, you know.
She had no damage, they said, the adjusters.
I understand that, but there's still, I'm saying, because now we're looking at mold. So there, you know, she needs to have an inspection done to see if there's mold starting. Again, prevent further damage, the biggest thing there. And like I said, there's a lot of standby power being run on that island in some of these homes to, again, keep ventilation going through. If she can keep ventilation going through that home, she's lowering her risk of mold.
Where would that mold be if it, no water damage, nothing?
Anywhere. I mean, it could be, so there's mold in this room right now. This is what everyone doesn't understand is right now, today in this room, even though this room is perfectly good, there's mold. So if we were to close this room up and turn off the air and we were to come back next week, you would start to see the mold. You'd see brown spots on the ceiling, on the wall. It would happen just without us, even though this room was not wet.
Yeah.
Yeah, so there's mold and.
Humidity sets it off.
What's that?
The humidity sets it off.
The humidity and the lack of ventilation. So, you
All
know,
these fifth floor condos that haven't been affected, they're being affected.
they will be affected because of the fact that they don't have ventilation and because of the fact that there's no, you know, again. So just a couple other things and, dehumidifiers. If someone, again, since you guys are all out there selling homes and everything, the best thing that your clients can do is go to Home Depot, go to Lowe's, buy a dehumidifier and put it in their house. It's gonna pull humidity out. So even if they can, again, if they have balconies that they can run generators on and they could put a dehumidifier in there and a fan in there, that's better than nothing. That's going to help them. But again, that's, you know, again, small generator. I have the Honda 2000 generators that I use, they look like a lunchbox almost. Those things will run several fans in a dehumidifier easily. Dehumidifier is going to pull that moisture out of the condo. The fan's going to circulate, you know, the dry air throughout the condo. So even something like that, yes.
So I didn't have any flood damage, you know, at all, thank God, but, you know, I was out of power for 6 days, which was also a miracle for this storm. I was
Right.
for the last 2 storms, but, when you don't have your air on, even in my house, do I have to worry about mold in that short period of time? So what do I do about it? Cause I don't want to.
So again, it's all about ventilation, right? So if your customer that you're talking about, your client that's coming down, the house, it's been closed up.
Right.
Your place is open, close, open, close.
Oh.
There's some natural ventilation going on there. And you're gonna be able to see, I mean, you go into your shower, everyone has mold in their shower. It's that orange stuff that's in the tile, that's mold. But again, there's different kinds of mold, right? There's black mold, which we all hear about on the news all the time. But then there's that orangey kind of mold that, you know, I probably need to go home this weekend and give my shower a scrubbing, you know, to get rid of that, you know, that just happens. So you're going to have that. So it's just a matter of, you know, it's your responsibility to kind of watch and try to limit, you know, if there's water places and, you know, and now the thing is where you can get clear cameras that hook to your phone that you can see if there's moisture in your home. Those are things, and, you know, as you're selling a house, I mean, that's not a bad thing for you guys to even own and have in your arsenal as one of those so that you can walk around. You can get it on Amazon, FLIR camera. It hooks to your iPhone and literally it tells you, and it's the same camera you'd use to figure out if something's hot or cold. What it does is it's going to show blue or it's going to show red. Blue means there's moisture there. Red means that it's dry, you know, so it's, and different ones work different ways, but Those are inexpensive, but what's nice about that is you can walk around any home, you can point it, you can see it on your iPhone, and it tells you exactly what you're seeing.
What is it called?
What's it
again?
called?
A FLIR camera. FIR.
IR
Yep.
camera.
You let them know you expect a kickback.
Right. So let's say you are in a high rise, and the high rise is all concrete, and, you lost power. Is there a mold issues even with high rise?
Yeah, because again, it's a concrete building, but then they actually put drywall on it. They put, wood studs or metal studs on it. So, the thing is with drywall, what's drywall made of? Anybody?
Gypsum.
Gypsum, and what's on the outside of that gypsum board?
Paper,
Paper. What's paper made out of?
wood.
Wood. What's trees, what is wood made out of? So trees like to drink. Even when they're in their dead state, when it's a piece of wood, it still likes to absorb water. Paper likes to absorb water, gypsum likes to absorb water. So what's happening is all the time it's trying to look for that, it's trying to grab that and bring it in. That's what's getting that moisture. So again, it's our job, of course, to keep our homes and, your customers keep their homes, again, dehumidified and keep them ventilated and keep the air on. We see more mold when someone, loses power, or when someone just goes, I'm shutting off the the air while I'm gone for this month. It won't be that bad. It's supposed to be cooler because it's January, no, you just keep the air on, you keep it at a low. And most people have these Nest thermostats now where they can actually kind of, monitor the house and everything. Those are great. And we recommend those highly because of the fact that you can look at your phone and you can see what the temperature of your house is, even when you're away. So if my air stops working, literally, I can see it right away.
You have a situation where the place has been sitting there for 6 weeks, like in a high road, have to go for more. I mean, what would you recommend that they do, knowing that it's just been dead air in there?
Yeah, so in normal circumstances, so we're still dealing with the cat event right now. In normal circumstances, our company will go out and do a free inspection on anyone that calls us and said, hey, can you come out and do an inspection? I think there's my house, the air was off for 5 days. I want to check for mold. Normally we'll come out and do that. Right now, of course, our crews are still, we've pulled, because of we're one company, all of our East Coast employees are on the West Coast and Northeast Coast doing work, and our, Southeast is pretty dead right now because nothing's going on. This is the normal stuff, supply line breaks. But, it's one of those deals where sorry, I lost my train of thought on that. Go back to your question again for me.
It's been sitting there for 6 weeks and there's been dead air in there. What do you recommend these people do?
Yep, so again, get an inspection. But so that's where I was going with it. Thank you. Normally, we go out and do a free inspection today. You call us up, we'll do it today. And right now, it's gonna be a little bit because of the fact that we're so backed up, right? But get an inspection, have them look at it. And again, we'll come out, even if you call, and Emily's got some information on that back table there. Emily is the account executive for Southwest Florida. So there's a phone number on all of those pads of papers that you grabbed, those pens that you grabbed. You can use that at any point. And what you can do is you can call into that number. What happens is this and say, hey, I'd like to get an inspection on a property. We will do that for you. We have a relationship with you. Again, right now, I'm going to, normally we say within 24 hours on a mold inspection. It's going to be longer than that. I can tell you that. But we'll come out and do free inspections for you guys so you can know what's going on in a home. And again, that doesn't, even if we do no work, even if we come out and we say, hey, you're great. We do an air test. And again, if we actually do a mold test, if we find mold and we need to figure out what kind of mold it is, we charge for that. But to go out and do that inspection to see if there's any presence of mold, we'll do that for free of charge.
Can't you see it? I mean, if there is mold, don't you smell it? Don't you see it? Like you say.
In most cases, you're going to smell it or see it, but if you catch it early enough, you may not.
Because, this condo, the air condition was off broke in the summertime, but the temperature stayed at 80 or 79 in that condo because it was completely on a high rise. There's no smell, no, nothing, it's all no carpet in there.
So again, that condo was enjoying some of the benefits of being in a condo, right? When I check into a hotel, which I'm in all the time, if I'm on the 8th floor, first thing I usually do is turn my air up, make it warmer because I'm enjoying what's going on below me and next to me and everything. So, again, that condo could be perfect. But again, it is nothing wrong with having something inspected.
I have a question, regarding the investors qualified property that are in bad shape. And they're under the impression that they can come in with their crew, fix a property, and then resell it, flip it. Now, that's not really the case, correct? If you're above a 4-foot line where drywall was cut off, isn't it safe to assume that you gotta bring all the whole structure down, you gotta rebuild, or can you,
No, you
can you
can,
fix it?
it can be fixed. And so those guys that are flipping it, I mean, they're tearing out everything they need to. And then, and it's easier. So we know drywall sheets are 4x8. So, so typically what you're gonna see is the cut line at 4 feet. Unless it was at 6 feet, then they're gonna go higher than that. But what those guys are doing is they're gonna come in and they're gonna tear out everything they can because it's just quicker. If I walked into this room and I didn't know where it was, it's easier for me. If I'm a flipper guy and I have a crew, it's easy for me just to tear out the whole room and put the room back because I can move through it quickly. So yeah, they're doing that and there's nothing wrong with that. That's a common practice with those guys, just to, tear out everything, put it back in.
So now these folks, that 4 feet up, went in, cut all the drywall out. Should you be using kills or something else, to make sure that the studs aren't getting moldy?
Yes.
Right?
Yes.
So you want to put kills, and if they're not doing that,
Yeah.
and if the house doesn't have power, we're just going back to.
Right. So we use something different than kills, but yes, I mean, it's the same process. This is more industrial. But yeah, they're gonna want to do that. Again, there's electrical concerns because of all these outlets have had salt water on them because it was rising water and that's going to corrode. So there's a lot. So again, anything below that 4-foot line, and so our company, one other thing that I should note is a lot of people in your position go, hey, I want a company that will come in and tear it out and put it back for me. We feel that's letting the fox in the hen house. What I mean by that is I would make more money on the putback than I do the tear out. So if I do both, the more I tear out, the more money I make on the putback. My company does 0 putback. The only thing we do is we remediate the issue and then we leave it for the contractor, the GC, to come in and put it back in place. And we don't have a relationship with the GC. So if you were to come to me and say, well, who's a good GC? I would go, I don't know, find someone in your area that's good. We do that because there's a lot of me that are going, and they're getting this on the side because of for every job that they recommend. We don't do that. So again, we lose jobs because of some people go, we want someone that's going to do everything. And I maintain, no, you don't. Yes.
Tile floors, do they need to be torn out or not? Or-
Again, it depends on what kind of tile it is. A lot of tile we can save, but some tile is very porous and we have to tear it out. And I just learned that one probably 4 weeks ago.
So the grout lines don't count, or?
The grout lines, I mean, again, it depends on the tile itself. But again, I've seen a lot of tile be saved. But our guys will determine that when they're there.
There's commercials going out there about the insulation in your attic. So I know in my particular home, we got 6 feet of water inside.
Mhm.
And my insulation was hit with the water, and because it came up and through the outside.
Get the soffit swell.
Yeah, and so I know I have to rip that out. I smell it every time I go back to my house, even with the circulating. We do have power, but we don't have AC running, because the ACs are down and
Right.
there's 2 AC units. Too much money to put out until we know if we're gonna be keeping the house or not, because we
Right.
still have to have the structural engineer tell us the yay or nay.
Yep.
But is it wise to recommend people to still look at their insulation?
So the blown in insulation all has to be removed. If it gets wet, the insulation with the backing on it.
Yeah.
Lots of times we dry that.
It is that, and you can see where mold is already coming up on it, and
Right.
it just
So that's-
rancid.
It has to go.
Okay.
I have a
But-
question from online whenever you're ready. Are you?
Yes.
Okay. Homeowner had some water damage because of Ian. The ceiling had an area of water leak and the refrigerator leaked only water when there wasn't electricity after the hurricane. All over the kitchen floor, through the walls, into parts of the living room, dining room, and pantry. Water remediation company came in about 8 days post Ian and before the field insurance adjuster did his inspection. The company put huge machines to dry all the water and prevent mold, opened nickel-sized holes in an area of the ceiling and in the kitchen cabinet toe kicks. A homeowner had done an AOB to this company. Was the AOB okay to do if it was just for that water remediation? Company pulled out baseboards only in the areas affected, but some of the paint came off where those baseboards were, which homeowner plans to hire someone else to repair, holes, paint baseboards. Does the homeowner add baseboard paint and replacement of toe kicks to their claim with the intention of having another contractor do the work? Or does the homeowner have to get it done by the same restoration company because they?
That was a lot. So to answer the first question, it's, when you're talking about the AOB, it depends on the company that are working with. I don't know who the company is. So as far as was it okay for them to sign an AOB or not, it depends on who that company was. Second thing there is, as far as if that company was, what they signed for, what that work order says. So does the work order say that when we're done, the house will be, put back together? Ours wouldn't say that. Ours would say is that when we're done, you'll have a nickel-sized hole. So that's one of the things. So the nickel-sized holes, what we do is we pop the baseboard. That's where we put those holes in. So then that way, if it's just if this was a normal circumstance and that sink back there leaked all weekend long, it was, again, it was class 1 water. This room was wet. We know it's in the walls. What we're going to do is we're going to put in what's called, it's kind of like an octopus. It's a big unit. It has all these tentacles. We're going to go where that carpeting baseboard is. We're going to rip that off of there. We're going to pop holes in there. And then we're going to start drying inside of the walls. Again, that's a case by case basis. So it's really hard for me to answer. One other thing that you just reminded me of is that we also do comparisons. So if companies come in and they've given them an estimate, and this is why the insurance carriers like us, because of the carriers, not the agencies. The carriers will actually call us up. But the carriers will call us up and say, will you do a comparison for us? So, and what they'll do is they'll take their work order, they'll take off the price and they'll go, this is how many fans, this is how many DUs, this is how many air scrubbers, and this is how many, what we had to do. And we'll come back and we'll give them a comparison. Our comparisons, I've never heard of us not being better priced on a comparison. Because of, again, our company has been around for 20 years. It's privately held by Joe. Joe owns the company. There is a Joe and Joe Taylor. And we'd rather hit base hits for you guys. And what that means is we'd rather go in and do an inspection and say, nothing for us to do here, and walk away and you go, gosh, that was a good experience. And then on the next one, you're going to trust more that, okay, if this one is wet and we need to do something, you're going to trust that. So that's why I always say is for everyone. Again, I don't know who that, that company is. I saw most of the companies on Fort Myers Beach right now are out of state. Out of state companies one told us that she was charged $4 per slice of pizza for the crew that was working on it. So the company bought the pizza and then rebuilt them at $4 a slice. Yeah, exactly.
Yeah, well, tell them the page was 55 pages long.
Yep.
Was this bill for
Yep.
55 pages
Yep.
for this condo, and she had to go in and dissect, and she said, well, they offered me a slice, and I said, no, but if I knew we were paying for it, I would have taken that. But yeah, $4 per, and she said they had 20 guys at one time in one small unit. And
Yeah,
they charged her every little thing.
So right now, what you're seeing is you're seeing a lot of state companies come in, and this is how they, this is how they make their years. Because of that 55-page bill, I can't even imagine how much it was. But it's one of those deals where they're charging for everything. They're charging for room and board. They're charging for, fuel. They're charging for, everything, slices, the whole 9 yards. So just get in with a good company, a good thing. And I will say again, if you didn't grab one on the back table there, Emily's got some. Did I answer that?
Yes.
Okay. Any other questions? Yes.
As far as your mold inspections, you guys go in the attic for free?
To do inspection there. And same thing with the attic, we're gonna do that during the better time of the day versus the worst time. We don't like attics, but if we need to see what's going on there, we're going to go.
Sure.
What's, estimate of the cost of that for someone? I mean, that's a free inspection.
Yes, it's a free inspection.
Okay.
We don't start charging until we start doing the work. And we don't charge. Now, again, we take money up front because there's a lot of stuff going on. On a normal case, we do the work and then we bill the carrier, we direct bill the customer, their deductible, that's normal. But during a cat storm, because there's so many different things that go on, we actually do 50% up front during cat storms.
And so what we never do is sign it.
Yes.
Somebody never does that. So when we have them sign something, it's the size order. It's a work order. So sometimes they might get confused to, well, we thought you didn't do anyways. We're signing something. Well, that's not an AOP. So we've never done it. Those, so against it, just isn't in our vocabulary.
What's your lead time for the pre-inspection?
Normally it's 24 hours. If for a standing water issue, it's 2 hours. So if you've got water in a house, we're gonna be there within now. The dirty little lie about that is we're usually there within an hour, but we say 2 hours. Right now, it's different because of all the guys are out, so we're gonna be a little bit different, but normal circumstances, 2 hours. Now, if it's mold, we'll schedule that because mold's not gonna change between now and tonight at 7 or tomorrow at 7. Any other questions?
Great.
Thank you.
Awesome. Thank you guys so much. Well, guys, that was pretty interesting, huh? Good stuff. All right. I want to throw out there that if none of you have heard of our Buffini training class, we're going to have another one in January. So keep your eyes open on our alerts for that. But it's a great class. We've had another great class this time. So think of that. Anything else for anybody?
Talk real quick about closure forms, the house.
What I'm seeing now in Fort Myers Beach is a disclosure that says, if you're showing the house, you're walking into a house, you have to sign a disclosure because there's no power. There's electrical lines that are everywhere. You could trip and fall. So they have a disclosure just to go show the property on Fort Myers Beach now. We've discussed with our attorneys whether we should have a disclosure, right, for the seller and for us as agents and brokers, right? So we know that sellers have to disclose anything that materially affects the value of that home, right? That's clear. We all know that. How do they know if there's mold back there, right? How do they know if that materially affects the value? It certainly does. But these people that are just ripping it out and not using any kind of kills or anything like that, then, there's a chance it's back there. So we haven't had our attorneys say, yes, you need this right now. But we're going to have that discussion next week with them as to whether we should have one for us and or the seller.
Stay tuned.
Yeah, exactly. Yeah. And so attorneys are a little afraid of it, I believe, because what happens if they go to litigation and lose that? Now you've got this disclaimer releasing everybody.
Right.
Right.
I think the other thing that I heard from the attorneys was, we were asking for a hold harmless for showings on these damaged homes. And the attorneys came back and said, don't let anyone in the damaged homes. That's a major liability. Like put no trespassing and say that you can look at pictures, but you don't want people in these houses because you're opening yourself up to liability. So,
yeah, but we are dealing with realtors, right? So
Right.
there's the commission here, it's 4 million.
Right.
So, no, but it didn't show its own. Yeah. Yes.
So like this house was water damaged and I'm closing today.
Mhm.
Once I'm closed, am I good?
Maybe.
Let's see.
So if you're using a farm park, that's its contract, right? The farm park has this disclaimer at the bottom, right? That says, it's up to you, Mr. Buyer. Don't come back to the agents, don't come back to the brokers, don't come back to the seller. It's up to you to discover everything. So from that point, you are covered.
Just with an as-is contract.
Yeah. Well, yeah, there's a disclaimer in every contract saying, hey, it's up to you.
Okay.
But, so Technically, yes, but you know,
Should we be using that Hurricane, Ian?
Ian
disclaimer?
disclosure, I would, yeah.
Okay.
I would just do it, and it's really saying, hey, man, it's up to you, right, to discover everything. That's really what that is. It isn't a hold harmless, right? Saying, you're not gonna come back and have litigation on us or them. It's more of, make sure you do your homework.
Is there anything, oh, sorry. Is there anything special, a special form that we need when we list these properties? Or just
We don't have
basic
one,
listing agreement?
yeah, we don't have one as of right now. So, but we'll definitely let you know.
Yeah, what disclosure do we have? Storm? Is there anything?
There's that, yeah, Hurricane Ian disclosure in app files. Yeah, and it's just saying, hey, buyer beware, essentially, right?
If I can add a suggestion, especially if you're working with buyers, I know that a lot of times to put enough money down, the loan's not gonna require you to get a pre-purchase inspection and those kinds of things. I actually don't need pre-purchase inspections in most cases, Windmill 4 point, that's it. But if you have a claim, a mold claim, a year or two from now, or you sell a house, and you have a mold claim a year or two from now, the insurance company is probably gonna say, were you aware of any of this? Show us the pre-purchase inspection form. So just another kind of CYA, if you have a buyer saying, hey, I want to save my $300 to not get a pre-purchase inspection, they may say, if you didn't even look around, you have no idea, right? Maybe the tile did need to be ripped out and replaced, but instead they just dried it clean with a towel. We're not responsible for damage that happened prior to the event, and if you weren't a responsible homeowner, so tell them, as your own CYA, they can decide you or not, but just know you're potentially setting yourself up for a heck of a claim, fight.
Yeah, and anyone who doesn't inspection, we want it in writing from you. Send it saying that I recommended you do get an inspection, right? And have them confirm it, because we don't want that coming back on. All right, thank you guys so much. Totally appreciate it. And we've got information back there for Bill Taylor Restoration. Okay.